Good morning. I'm Matt Cooper, analyst on the macro team here at Hedgeye. Thank you for joining us today. I'm joined in the studio here with Hedgeye CEO Keith McCullough, and we're going to go through some real-time alerts here today.
We are. We're going to do this coaching session style. So, one of my big regrets, let's just start with that, with real-time alerts in the early days was that I didn't really explain what I was doing. Okay, so again, as I'm sure you can appreciate, if you don't explain what you're doing and you just show the results, that's going to have an interesting set of relationships, especially if you're dealing with me. Like when we started the firm, as you know, Coop, we started with only institutional managers and the highest level hedge fund managers at that. So I thought if I can't validate the product with the real pros, then I don't have a product to sell, right? Because I'm not selling you a banking deal. I'm not giving you a brokered commission. I'm not getting anything other than if I generate alpha, you'll pay me. Right? So I started really not explaining much about the moves in real-time alerts, but I was generating plenty of alpha. Calling 2008 as a crash and showing that, which you can go back, there are like 9,000 of these bloody things, right? You go back and you can look at the accuracy. So accuracy is one thing, but I'm really not, as certainly at this stage of my career, I'm 50 years old, I'm 18 years into the game, or with Hedgeye, 25 years in all in. And I'm really not interested in giving you fish. I want to teach you how to fish, okay? This isn't about giving you stock picks, right? So whatever you thought you were looking for in the prior, I'm not going to give it to you, all right? I'm going to give you what I do, how I do it, how it's fully integrated into my portfolio, which is the most important thing, really, I think you'll get from this. And I'm going to systematically go through a bunch of examples of real-time alerts that I've recently issued. I won't go back more than a week because I know some people are really focused on what's happening now. That's not the right way to do it, but I hear you. I see you. I'm sensitive to these. I empathize now, I think is what I say. But that doesn't mean that you're good at this. Let's just be clear. I mean, if you're new to this and you expect to be like a neurosurgeon in the first week, I mean, that's kind of an idiotic assumption, right? So let's just have an honest relationship. Many of you are beginners. A lot of you are intermediate to advanced. And we have some power users who will watch this and they'll say, man, I didn't even get that subtlety. Thanks for going through this. So again, I guess that's the last thing I'd say. I do find it amazing. Let's just use that word. That I'll send out what I'll go through next in terms of actual real-time alerts. And I'll have a hedge fund manager that everybody knows. Like they probably bow to the guy and ask me multiple questions about it, ask me about other tickers and whatnot. And then I'll get 2 emails from some dudes who've never played the game in their life saying I'm an idiot. It's amazing. I just find it to be an amazing compare and contrast, right? You have the pros sitting in the dugout talking back and forth about a pitch I made or a hit that we had, and you got the guys at the popcorn stand over there chirping you. I love it. It's amazing, right? It's an opportunity. I guess that's what Ted Lasso would say. Smells like opportunity.
It reminds me of, it's like you got someone kind of what do they call it, an armchair quarterback or something, where you're sitting on the couch and you're watching golf and you're like, how could he miss that putt? And you're the one sitting on the couch. You're not out there playing in the open or whatever it is. So,
well, I'm not that guy because I missed plenty of putts and I understand my own talent level at the game of golf. So thank you for that. If you didn't know, Coop was a successful Division I. You were a captain of the golf team, weren't you? Captain of a Division I golf team. So he knows a lot more about golf than most of us. Before we get into these, let's do what you have to do before you make any decision. Position sizing. Typically, if somebody's yelling, whining, crying, complaining about a position, it's because they're too big in it, or I totally, we got it wrong, which is totally fair on our side. But what I don't think is good for you is if you don't have structure. If you don't have consistency, discipline, structure in your portfolio, it doesn't really matter what you're doing because you're going to screw up so many times by not being disciplined, consistent with structure. That somebody who is just going to beat you severely over time. So at the asset class level, okay, so today we just signaled buy on the biggest foreign currency position you could take, which is the US dollar, okay, UUP. That position, I am currently at 6%. My max is 12, my minimum is 3, okay? Before I got the signal to buy the US dollar today and sent it to you, right? Before I did that, I knew what these rules were. I knew I had to come in at a 3% minimum when I did in the last couple weeks. And today when I took it up to 6. Okay? I knew I was going to do that. If it's a long short, we do a lot of these, right? See what our batting average is historically on the short side versus the long side? It's the same. Consistent, discipline, structure. Okay? I don't care what side of the plate I have to hit on. I'm a switch hitter. I go both ways. Exact same batting average. Think about that. Exact same batting average, around 78% from the long and short side going back 18 years.
Pretty crazy.
I'm very proud of that, right? So when you short things, if you decide to short things, your short should always be half the size of your max long position, okay? Now this is a long short book of stocks. Let's use that as an example. The minimum positions you should have are 1% and 2% respectively. If it's not like a 2% position, then it's really not going to turn the needle. And not ironically, the minimum position I have for an ETF position is also 2% minimum. Okay, this min is 3. Okay, so let's just make sure that when we touch positions, we're touching it within the context of this. So if I say I'm covering some, and I have a 2% position, I'll typically cover minus 50 to minus 100 basis points. If I cover 50 basis points, the position is what? 1.5. If I cover 100 basis points, it's down at my minimum. I will often say I'm covering it to my minimum if I am covering it to my minimum. But again, I hope you can appreciate it. I'm plenty busy during the day, and I have my own dog. I can't walk yours too, okay? You gotta at some point understand what the rules of the system or of the process that you're trying to master. And again, I'm not saying when I wrote Master the Market, I didn't say I'm freaking nailing the market. I'm trying to master my process, right? You need to master your process. I'm not saying here, Coop, that a younger guy like you should have what a lot of people would say that I'm pretty conservative. Well, that's fine. I want to be conservative. Like I don't need to get out the calculator to say that if I make 8 basis points on X million dollars, how much money that is to me. That's plenty. And I've worked damn hard for it, and I'm going to preserve and protect it. But I'm 50 years old. If you're 25 or you're 30 and you're not married and you want to take bigger shots, have at it. But if these positions are 8, 9, 10% at the max and you start getting anxiety every time they move 100 basis points, you got the wrong answer, cowboy. You got to figure it out, okay? You're riding the wrong horses. You need to figure out what your level is and what your emotions are, right? You ever struggle with that? A lot of people do. I struggle with that still. That's why I had to come up with these.
Yeah, everybody's different, right? Everybody's got different needs and different emotion, I guess like emotional, whatever the word is, limits.
Yes, some people in this business generally have high IQ and many have low EQ, okay? Now, when I came into the business, I was fortunate enough that my bosses put these parameters on me. I couldn't, for the firm, have greater than a 3% short position in the firm book. Okay? So I did learn with live ammo. A lot of the things that I've come up with, everything I've come up with in terms of running money, my own money, my long short book, my long only book, which we publish through Macro Pro and Portfolio Solutions, that's all a function of 25 years of learning from my mistakes. Okay? So let's just, let's keep this picture in the background, and I'll try to tie where it's applicable. I'll try to tie real-time alerts messaging back to the book, right? Because when I give you a real-time alert, it's not just about that one thing. Some yo-yo might think that, and yeah, I'm calling him a yo-yo because that's just a stupid way to think about it. That's not a really that is something that we can help fix. But when we're making a decision, when I'm writing down these coaching notes, I'm writing about the entirety of my portfolio and hopefully coaching you through yours. All right, so let's just jump into this one from the 5th of November. So that's as far back as I want to go, just because memories can be short. But so you get something like Xylem. Okay, Xylem has been a position that we've had on for a long period of time. Okay, so this would be called a winner. Now, if I write down that 100% of the real-time alerts that I've signaled on this have been accurate, I think most people would say that that's pretty good, right? People say batting averages don't matter. Well, that one's pretty good. All right? Now, the point on this is that it's been part of signal strength stocks, which is a list of stocks that I'm picking from. Okay? This is number 4 in that product. That means that if I take that product and I take 60 tickers, it's at number 4, XYL. okay? That means that it's the 4th oldest piece of inventory that I have on my list, okay? Now, that's why I say, I don't know why somebody would use my process and not use the inventory that I publish weekly, but that's what that is. So I'm giving you a lot of information here, right? This is, again, the number 4 on our signal strength product. We added it back in May. There's a lot of information here. Hedgeye called the crash from February to April. We didn't own any stocks pretty much of consequence over that time period other than like Philip Morris. So to come in May and start adding our best ideas, water being one of the biggest themes that we want to be long, more on that later, this is important, right? When the street was puking up stocks that they should have sold in January, here we are, we come right in. This is a super successful position. In your year, if you're running a real portfolio, you only need 8 to 12 of those to make your year. Some would say you need less, depending on how big their size is. Big winners that, where every single dip you buy, you made money. That's what, again, when I say 10 straight winning buy signals, okay? So again, it's not about these, you'll see people make these comments, the yo-yo comments. Well, it's only a 2% gain. I want to go on Reddit and make 132% buying, Beyond Meat. This isn't for me. Good. Get the fuck out of here. It's not what we're trying to do. We're trying to find long-term winners and tell you where a good spot is to add to the winner. All right? Beyond rule number 1, which I exhaust, which is don't lose money. Rule number 2, ride winners. Rule number 3, stop yourself out of losers. Within rule number 2, all you're doing in a stock like this, that's going like this, is you're buying it here, you're buying it here, you're buying it here. And you're selling some on the bounces. Not all, selling some. Okay? That's exhibit number 1.
So just to kind of go off of that a little bit, because if you see sell signal, that could imply that you're negative on the stock, right? But this is still a signal strength on the long side, still
yes.
bullish trend, but it's just at the top of the range. Is that how
yes.
you would?
And I granted, I have acknowledged this. People have given me this feedback. They will actually admit it. If you can't read any of this, and all you can see is this, it's going to be a tough way to go. There are instructions. There's components to this. If all you can see is sell, that you're completely misusing the product or not understanding the value in it, right? I get that it says sell, but actually in the email it says sell some. Yep. And if I'm stopping myself out of it, it'll say, like I just did in Microsoft, I'm stopped out, it'll just say sell. That doesn't say a sell some. Okay? So more on that one later as well. Now, here's a good one on this front where, some people say, well, you said this and you didn't do that. And it's like, enough. They're all time-stamped. There's no real debate about this. Go to the Celsius one. So this was a big mistake for many last week. And I didn't consider it a big mistake for me. I thought it was a very good risk-managed process. Yes, it ended up being a loser if you didn't have the sizing right. Let's just start with that. But again, 2-dot rule. What does that mean? That means that generally speaking, 100% of the time, if I have 2 dots, that means that I hit the buy twice. 100% of the time, that means that the first dot was wrong. By definition, if I'm wrong on something, those are my weaker signals because I don't have them right. They're in the 22% of the time that I'm wrong. So again, 22% of the time is not bad. It's not perfect, right? But again, this already had a 2-dot rule, and it had this thing pending, which is called an earnings catalyst. So this thing was signaling to me that it's time to sell some on the rip, right? So you do that. It's a good decision. Next day, the thing is down huge, right? And now it's off signal strength as a result. It got added to signal strength at $33, right? You could have ridden this stock from 33 to whatever peaked at 65, all the way up and done this the whole time. And the one time that it finally blows up, which stocks generally and eventually do, if they work for too long, it goes down huge on the day. You'll get a bunch of people, oh my God, I'm ba, 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 ba. Stop it. what you need to do is understand the life of a position, okay? The life of something coming into your book, like XYL or Celsius for that matter, you've booked so many gains adhering to the process that you're not going to, on that one day, and by the way, we don't have many of these things that happen on a day. I'm using this as an explicit example, unlike the people on, on the comedy channels. I mean, this was a mistake that day. But the process did tell you to de-risk it. If it's a weaker stock, let's go back to the position sizing. If it's a weakening sell strength stock, I have long, this thing is down at my minimum for sure, right? If I'd been wrong on it I was wrong on it once and I'm telling you to sell it ahead of a catalyst, that should not be a 6+% position. Now the guy who's really on hair on fire has probably got as like a 10% position, didn't see the real-time alert, et cetera, et cetera. So again, trying to do my best, give you a signal. Here's another one that was a very good decision to get the hell out of it before the catalyst. Analysts telling me the quarter is going to be great. Number 5, Tapestry. So again, if you sold this thing on this day at that time at 100 and 2 days later or whatever it was, the thing's at $98. I'm not randomly getting these signals, okay? The signal is built on this thing called PVV, price, volume, volatility, and the rocks embedded therein. That's my model. The rate of change, the relationship between price, volume, and volatility, the fractal patterns that are born out of that. So when the price is breaking down, i.e. I've hit the dots, 2 dots means that the first one's wrong. Okay, you're wrong. Your analyst is going to be wrong here. You follow me? If the analyst is going to be right, inside information is constantly leaking ahead of all these quarters. That's why we have the volume piece. The price is going down and the volume's going up into the catalyst. Now, what are we thinking here? I'm thinking that a significant percentage of the time my analysts are wrong, so I'll go with that. So that's a sell signal ahead of the catalyst. That's not a buy signal because Brian likes it. In fact, he was right. They did have a great quarter, but they didn't have good guidance. So the market had that right too. So again and again and again, this isn't about being captain stock picker. This is about being a risk manager of tickers in your portfolio. Totally different way to do it, as opposed to like starting with, oh my God, I'm Peter Lynch. I have these things that I'm going to own forever. I mean, if you want to be Peter Lynch, good luck. That doesn't work anymore. Okay? And all due respect to Peter Lynch, in that game, just like all the guys who scored 50 goals in the NHL with wooden sticks, those wooden sticks were great. They don't work anymore. Not with modern day algos, market structure, et cetera. Okay, so again, this is what we're looking at. Does that make sense in terms of like you saying, okay, look, this one is sell. I've already been wrong on it. If I use, so again, if you can read the words and comprehend the coaching lessons, that's a real important thing. If you don't have time to, the people that do deserve to get better. There's nothing else in your life that you would say otherwise about that. All right, next one. Let's do, so here's a good one where somebody would say, well, you didn't send me a buy signal on Qs. I mean, I've been buying Qs, the damn dips in Qs since May. Okay, let's just start with that. But this is the PFIX on slide 6. So PFIX. So again, if all you're doing is like, most people don't know what the hell PFIX is. The simplified people are probably pissed off because it says sell it. Again, this is really important. If you didn't get longer of your stronger signal strength stocks and ETFs when I went to 0 shorts in RTA yesterday, you should have. Not 100% of the time, but higher than 78% of the time. When I go to 0 shorts within a bullish market view, equity market view, that's a very good decision, right? That means when I go to 0 shorts, back to the long short book, okay? Go back to let's go bring it back to what are we trying to communicate here? Well, what I'm trying to communicate is you look at your long short book, I don't know what positions you have on, but a lot of the positions should be going towards their minimum. If I'm at 0, while real-time alerts is not a portfolio, if you read what I wrote and you see that I have 0 shorts, there's signal in that, okay? So bring me back to the PFIX. Also, like again, there was a long time where I didn't write these coaching notes, right? They're called coaching notes, right? Macro pros, okay? Subscribers will have noticed what I didn't do this morning, which is in something like TLT, hint, I didn't buy more. Why? Because that's not my strongest signal strength position. Positions like QQQ and QTUM, which is quantum. So I bought more of those. How much more information do you want in a day if I'm going to give you, a lot of these come out throughout the day. Like, you have the only hedge fund manager on the planet with experience and, again, alpha generation in down markets that is sending you signals that is telling you exactly what I'm thinking about the entirety of my book. Again, shame on me for not communicating it in the early days, just giving you the alpha, but now I'm giving you the alpha and how to repeat it, okay? So this, again, you should not need a QQQ buy signal to read the words in English and see, at the end of the day, you can look at my long book. You can see that my QQQ position into Friday went up to one of my top 5 positions, okay? So trying my best to not just talk about a ticker here in PFIX.
I think it's helpful too because, I mean, Josh mentioned this on the call a couple weeks ago, is that like the average attention span is 8 seconds for an adult. And so, you know, you read that shorting PFIX, and until today, people might even not have known that there was text in these emails. You know, they just read the headline of it and don't read the text. So now, if people are watching this and they're like, oh, there actually is some value to reading what is said in there. I mean, you're doing it for a reason, right? Like, we didn't always have the coaching notes, and now we do. And so
this
it's all intentional.
This is a function of the move index. So everyone wants to know about the move index, right? Well, I was shorting rate sensitivity there. I mean, that's a pretty sophisticated play. You're not calling the yo-yo guy from the popcorn machine about treasury bond volatility. And I'm not trying to big time anybody. I'm just saying they have no idea. Like, so again, you'll hear this. I heard this actually the other day. Paul Maurice, you know who he is? Coach of the Florida Panthers.
Oh, yeah.
Longtime NHL coach. He said the biggest problem with players that we bring in today is that they were all scorers. They're all super talented, but they don't know how to play the game. Yeah. He's talking about NHL players that are in his organization currently. He said the difference between the ones that succeed early and those who don't are the ones who understand, you know, what to do with the puck late in a shift, not to have a turnover, et cetera, et cetera. He rattled off a bunch of things that hockey people would know, right? There's so many games within the game when you look at a properly constructed long-only portfolio or a long-short book. Okay, so again, I'm not making apologies for playing at a high level. I'm trying to get to the places where I need to get you to the higher level. Okay, next one. Now people love these, right? And I never get love notes on it, and not like I need any. I actually, if you can't tell, do better when I get criticized. I love feedback. This thing, I sent this sell some signal, right? Some, and the stock went down to 147 today. Most of what we, like, you can have so if you go to the performance table, actually, Gendron, can you show the realized positions, like on the website, just our performance table that shows, okay. So on that, can I write on that one or no? No? You can go down, if you go down the list, it's like 3.71% gain at 160.66. Well, would you prefer to have a 4% gain, or would you prefer to have the loss from that point? I mean, who gets you up? Who helps you risk manage positions? Now, 5 below it broke immediate term trade support. It's teetering on a trend breakdown, and you're out, right? These are the things that really make, you know, again, you can either be the person at the popcorn machine whining about 2 and 3 and 4% gains, because you really need this, like, to get out of it, you know, living in a van down by the river. This is not what we're doing, right? You know, believe me, if I went back and worked, you know, on one of these at a hedge fund platform, this kind of alpha, especially in these kinds of markets, is huge to get that, right? Just do the math. If you have a bunch of 2, 3, 4% winners, you know, throughout a period of time, and you do it every single day, that's the goal, right? You know, so again, and we're talking about trading around core positions. We're not saying that this is an all or none, okay? So do yourself a favor. When you get a real-time alert, you don't just put all your chips on like you're playing craps, right? This is ridiculous, right? You put on a position, you start to build it incrementally on down days, and on up days like that one, you can sell a big piece of it or sell 50 to 100 basis points of it. So again, go back to the what are we doing here, right? If you took 5 below, anytime that it was down near the low end of the range, which we also publish on these things in different products. If you took the position up to 4%, great. Now at $160, you take it down to 2%. Okay, and well, maybe today, I wouldn't buy it here today, by the way, because it could be a trend breakdown, which is a stop. Stop being I'm out. Okay, so now it's at my minimum. Very rarely would I not take a position at least close to its minimum on. If it's in RTA, that means it's a very, at least to me, a very actionable signal. I act way more times in my long short book than I do. If you were to watch me throughout the day, first of all, I have upwards of 50 positions, right? In my long short book. I'm paying attention to a lot of different things. I think actually doing it that way allows me to say the things that I say because I don't have time to think otherwise, right? They're just tickers. Like I give a shit, right? It's really all it's just like, okay, bought some, sold some, get rid of some of this, buy some of that. If you can get there, you're gonna do way better than you currently do. Because currently, if you don't do that, you're relying on having a huge slugging percentage, right? In other words, you need, because you only have a small amount of positions and they're too big, you need them to go up a lot. And when they go down a lot, you cancel. Right? That's not how to use the product.
I mean,
right?
there's a pretty big false sense of reality, I think, in markets, and as with anything, right? Like with social media, and you've got platforms like Reddit, and people are posting their returns, and I started with they're like $50, and now I have 100,000, and that's become the expectation for people.
Oh,
and
great.
then they come
Great.
here, and they're like, well, this isn't giving me that. But
yeah. Well, ask that person to show them that super duper stock picking book in 2008.
Yeah.
2016, 2020, 2022, and then we'd be talking in English, okay? Because you're talking to the only person who's called all of those stock market crashes. Not talking to, you're listening to. God help us all. You're stuck with me. All right, copper. Now, okay, we go from 5 below to copper. Amazing. One performs very well in that kind of weather. But again, two different asset classes. Right? We're not here just to coach you through stock picking. This isn't some stocks only fan website. This is copper, the doctor. All right. So this thing, the doctor pays us, et cetera, et cetera. If for those of you who are new to risk managing commodities, they have more volatility typically than most things, including equities. That means that we can trade them more actively. And I got this up to one of the biggest positions that I've ever had for the fam. So again, let's just say that my PA was only $5 million, right? However many years ago that was. Well, if I had my max position in copper on $5 million, we can do the math. How big would the position be? Okay. This is worth taking the time. All right. It'd be a $200,000 position. Okay. And it goes up. Let's say the $200,000 position goes up 5%, I make 10 grand. That's all right.
It's a nice trip, nice vacation.
Now you can appreciate why I only need to take a 4% max position. And again, my PA is not $5 million. So this is really important. For me to make sure that you know that what I'm doing is mainly like what you fear. I don't blame you. Most people are lying to you, cheating you, stealing from you, taking a broker commission from you. I'm not doing any of that. So all the things that you think I could be doing, I'm not doing. I'm actually doing in much more detail what I do for myself and my family every single day. And that thing, if there's a fault in that, it's that me extrapolating that all of you are running something north of $5 million in your PA. Yeah? Again, that's why I can afford to have smaller positions, because that's a lot of money to me and my family. Getting even if it was a $200,000 position, getting it right for 5%. Okay? So again, try to think this through. Go back to the main board one more time. If it is a commodity, like, okay, how did he go to 4%? Okay? If it's a commodity, it's right there on the page, 4%, right? See that number? 4%. One more time. Not a magic trick. 4%, right? So that's his max position. His minimum position is 1%. Currently, copper I have at 1.5%. So again, on the bounce, I sold it. Sold some. Sell 100 to 150 basis points down from 4, and there you go. Here's another a great example of a portfolio manager's move that ends up in a signal that ends up being accurate. Now, slide 10. Who goes from copper to Simply Good Foods? I do. I call this one Simply Terrible Foods, but because it's been a fantastic short. But again, it's reminding you like what we're doing for everything, okay? Every single bullish trend stocks we buy on decelerating volume. And we short bearish trends that are bouncing on decelerating volume. Again, what am I looking at? I'm looking at the PVV relative to the ROCs, the rates of change of price, volume, and volatility. Now on that day, at this price, this is totally unexciting to some people. But let's go back to that day last week. I mean, this thing, first of all, I nailed it within like pennies. The signal did, which again, I don't need compliments on this. I'm used to doing that. But this thing went to $20.58 that day, okay? On the bounce. It went from $19 to $28, basically from 19 up to here. We shorted it, and since then, it's gone back down to 19.32. You tell me if you have 10 of those in your short book that you're not going to be the man or the woman at 0.72. I'll tell you otherwise. Because you actually shorted something as the market was bottoming that went straight down. You know how valuable that is for your shorts to have worked yesterday? Oh, you didn't get that. Oh, but it's only at, like, let's go back. What is the percentage return, guys? Can you show me on the thing? Like, this is a great example, right? Some of you say, I can't subscribe to this. I only made 2.62%. I want to go back on Reddit and I want to make myself an opportunity to get out of that van down by the river. You know how much alpha it is to have a short that does that over a period of time that everything else goes straight up? Yeah, it's got a belly laugh. It's kind of like, come on. Like, so again, I hope you can appreciate what the difference is versus what you might think the game is telling you and what's actually going on. It's also a stock that's been a core short for a long time. It's been a bearish trend for a long time, and it's in the worst sector you could be in, which is also our number one short from a top-down portfolio perspective. Back to the book. Your long short book, your ETFs should be bigger than your stocks. All right. So my 3% positions would be XLP, consumer staples. I just took PSCC yesterday up towards my max. I'm at 2.5% on this. This one I'm actually down at 1.5 because it had gone down, so I covered some. Today I'm actually going to add to XLP because it bounced. But again, so maybe I have 2 to 3% positions in those, and SMLP would be smaller than that, typically be 1 to 2%. You know, if I'm sizing them relative to the more liquid ETFs that have lower betas, because I'm beta adjusting the positions. Don't have time to go through that entirely, because we're already at the 32nd minute, and I want to get through a lot of stuff here. All right, let's see, next one. This is a good example of just doing the same thing over and over again. This is selling, I mentioned that we are bullish on water. Okay, so we don't just own Xylem, which is, we own the ETF that has Xylem in it. So that's double dipping. When I'm double dipping, that means I must really like it, right? We'll get into that with healthcare. So again, Aqua. Ideally, our full investing, our full cycle investing happens at the low end of the risk ranges, okay? So that we can risk manage and sell some of these after they bounce, right? If that's all you do, if all you do is buy things that do this over a period of 3 months or more, and all you do is buy it here and here, you're getting good. That's what we're trying to coach, right? You're not going to get rich on that signal. You're going to stay rich, all right? It's another one-liner. Now, you don't have to be rich to do this. You just have to be not an idiot, all right? So,
and this would be kind of your way to in a risk management way, like, I guess, as much as you could call it levering up, like levering up on water, right? For example, like you buy the ETF, you buy the stock, or the stock that's in the ETF, and that's like your way of kind of doubling up, but still staying within your risk management frame. So that's like your form of, getting some juice out of your framework, right?
Like we're old enough to remember that this first of all happened on the 6th. Yeah. How many positions and lessons did I just walk through? It took me over 20 minutes. The Excel, the one I started with happened on the day before that. That's a lot of information that I give you in a day. Right? It's not about always being the he's always right or he sucks and he's always wrong. It's about being what I said at the outset. Consistent, discipline with structure. Okay? We'll keep going. How about that buy signal to buy HII? That's one of, again, on the 6th, we bought that one at 305. Today is at what, 323, 324, something like that? Okay, great. Keith got it right. Great. It's that doesn't matter. What matters is this note right here. Buying during bull market corrections is what you want to be doing, okay? This is a process-driven exercise. Have I said that yet, right? We also call these cleanup days. The best way to clean up your portfolio is to add to winners that are correcting and keep stopping out of losers and are reducing their size, like I did in IWM today. What's IWM? The Russell 2000. So I'll routinely get on the macro show and the comments and feedback be like, what are you doing with the Russell? It was like, I sold some yesterday. It all keeps coming back at me. It's like you ever well, actually we got some of these in our neighborhood, like dogs that are just like on tilt. They run right up to that fence and they'll bark. And you're like, what the fuck is wrong with the people that own this thing? I mean, it's just like bad behavior, really bad behavior. First of all, when you're risk managing money and trying to run money for real, this is what the look should be in front of your screen. That's it. Not it's when I say people do stupid shit, that's what we're talking about. So just because you didn't read the notes or get the notes doesn't mean that I didn't do that, right? I feed my dog with this. My dog is very disciplined. He doesn't act that way, right? Don't get mad at me for some other dog's behavior. This is what we did yesterday, and it's in the notes, and this is super valuable to a lot of people that know what they're doing. So again, I'm trying to get you to understand it's not just about some extremely good buy signal, if I don't say so myself, on HII, and that's been another name that's been a winner for us for a while. How about this one? At the lows on Friday, I sent you a signal not to buy Qs because I already done that in 2 different signals ago or whatever, but I said the same thing in a different way. How many people were shorting anti-beta? So on the market up day, you get a huge market up day, and my short, again, is working on an up day. That's called alpha. Okay? Again, you got to get creative when you play the game too. You got to see things that other people aren't looking at. I know a lot of hedge funds weren't shorting BTAL on Friday morning because I could see the volume. And I know which hedge fund clients we have that did because they sent me a thank you note on Monday. Okay? So again, this is a big thing. Volatility regime shifts into the chop bucket. That should give you some patience, and that's where we were that day. But when you're in the chop bucket, it doesn't mean it's the end of the world. It means you need to be just a little bit more patient in buying dips and selling rips. I said unless SPY breaks trend, selling the rip in protection or anti-beta is something I want to fade in the chop too. I can't do any better than that.
I mean, just to chime in quickly, I mean, this was down like a little under 3% from Friday to Monday when the S&P was up 3% or 2.5% from, or maybe NASDAQ.
From the point that we put
from
this
the point
on.
that you put that on.
Because this was
it
happened at 128.
Yeah. So it's like that's some pretty good alpha right there.
Yeah, this is why professionals like us. What the goal here is to get amateurs to understand what professionals do, right? Okay, here's another one where we'd go back to that dog barking, right? It's like TLT. Yeah, and hell hath seen no fury. Like if we have a position in TLT, Russell 2000, QQQ, and this is where like a larger community of inexperienced players are, or those who are maybe experienced but only like to stay in that very small dog-fenced area. We like to play the whole neighborhood. Boomer and I walk many neighborhoods. We're multi-factor, we're multi-duration, and we have good behavior, okay? You want me and my dog living in your neighborhood. We clean up after ourselves. All right, okay, so we got this. As soon as this ticker is on the tape, I mean, you're gonna have some people on, pardon the pun, but on tilt. So again, while buying bonds incrementally is what I said to do at the top end of the range earlier in the week. And again, don't forget that these things are also a summary of my life's work and of where I've been in this part of the cycle. Okay? So when I started to buy bonds, it's because for 2 or 3 days in a row, the 10-year yield was at the top end of the range, and so was the 30-year. That's when I started to add to TLT. It was actually a very good decision from a capital allocation perspective. You know, and adding it incrementally is what I said, it added ballast to the book for the last few days. Those were the days that Spy Monkey was going down and my TLT was going up. But I just don't sit on that. This is like a 3 or 4 day move. What I do is rotate on that, okay? So I started to sell some TLT and add to QQQ, QTUM, etc. Okay? This is one of the most important things that I could have written. QQQ isn't quite at the low end of the range, so I'll wait on that one in RTA. Why? But I want you to tell me every single time you do. First of all, I can't because I have a life. Secondly, you know, unfortunately, we have new subscribers who want me to be perfect. I'm not going to be, but damn well I'm going to try, right? So this is a very specific asset allocation move. I would dare say it's sophisticated for somebody who doesn't do asset allocation, because anything that we do is far more sophisticated than they do. But this is a real important thing, right? Where you're like, I'm reducing TLT to my minimum. Good decision. And actually yesterday I bought 50 basis points back, you know, because the stock market was up, so I was selling some Qs and I was buying some TLT back. And that wasn't in real-time alerts. But you should be able to predict that. I buy when they're down and I sell when they're up, okay? So there's that. Healthcare, when I say I double dip, oh yeah. That means that, like, when I'm long 2 different things that are the same thing, but they're different exposures inside of that thing. So on pink, we can do that when I just sold that because it made a 3-month high, sold some of it, okay? So again, sold some. It was another great day. Healthcare is the #1 sector style to be long right now. We're long both, right? Both of those 2 things in Portfolio Solutions. They're both in ETF Pro as well. We buy more on red days so we can sell some on days like today. Again, all we're doing, go back to the portfolio, all we're doing with these longs is we're oscillating between, especially if it's an equity ETF, we're oscillating between these 2 positions if it's got a lot of signal strength, right? Maybe from time to time it gets down to 2.5 or 2, but whatever. You know, if it's down here and the thing's down, I'm buying more. And if it's up at a 3-month high, I'm selling some. That's how you make money. If you don't want to trade it actively, I'll make more money than you over time. Because if something goes from $4 to $6 and I trade it 5 times profitably, I don't make 2. I make more than 2. Okay? Good. Sell signal on the small caps, I already hit on that, so just making sure that, you know, reiterated the same. That's on slide 21, PSCC. And let's just get into things that I just did in the last 24 hours. This one. So, okay, I have my 60 things that I can buy. JB Hunt's a relatively new one. Okay, I like the ones that are relatively new because they have more signal strength on a shorter duration, or they wouldn't be new. Okay, so in this case, what happens? PVV, price volume volatility relative to the rate of change. On this stock goes up on an earnings announcement. So what's happening is that the volume and the price are going up like at a very high pace. So again, it's one of the 59 names that we have. It broke out recently on the earnings. Today it was down small on decelerating volume. Oh, but it's down today, Keith. It is. I hope it's down right now. Yeah. What are you gonna get a divorce from your wife, or buy more? Right? If it's against you in real-time alerts, this is one of the most important lessons, and I'm only at minute 43. Do not focus on the cost basis of anything, never mind what I have in real-time alerts. Because in real-time alerts, that's not my cost basis. I'm constantly incrementally touching positions. I made real-time alerts so they only get 3 shots. I rarely use 3 dots. If I use 2, as I've outlined, I'm generally wrong. You know, I'm giving you like 1 shot. Like, that doesn't mean you should just go all in on the 1 shot. That means you should understand, okay, this is a good spot to add or to subtract. Big difference, right? I think a lot of you this is resonating with. I can sense it. Yeah, that's the thing about a process.
And I mean, this is a sure, it's buy signal and it's down, but like, 78% of the time you're going to be right. If you could go to a blackjack table and know 78% of the time you're going to win, like if you lose the first hand, you're going to keep playing, right? Like you're going to keep going because you know that the odds are in your favor. So,
if you play the game the right way.
right. Yep.
You can't go put your bet at the blackjack table and then go to the bar for an hour and a half. Like you don't just get to like casually watch the bet. I mean,
yeah.
This is for people who want to engage. And again, if you don't want to engage at the same level of frequency and put in as much time, that doesn't take away from all the lessons on how to do the job right. No, everybody in life wants a shortcut. Oh, I just want to put these on and I'm going to get rich. Okay, go gambling. That's not what we're trying to do here. Okay, today's signals. I already mentioned this, but this is a huge one. I mean, if there's one thing I always say, if I was locked in a dark room and only had one live quote, what would it be to make money? It would be the US dollar. Now, our long-term 18-year batting average on the dollar, gold, et cetera, speaks for itself. It's generally all one and the same thing. Okay, it's getting the signal to the quad right. So on this one, I asked the question, and I think it's real important. Like I'm trying. I know I'm a better coach because I wasn't coaching it really at all. 18 years ago, I was just slapping it on. But in this case, like I like to ask you a question: are you long of the U.S. dollar yet? Well, what we do know is that consensus and most of your friends aren't. You can see that in the positioning. You can see it in the newsletters. How many more people do you need to be bullish on gold and bearish on the dollar? Right? I mean, we're bullish on both. You don't have to be. It's not a binary outcome, unless we're in the wrong quad. Okay, if we're in quad 2. Now we're going on a quad 3, 2, 1 count. So yeah, even in this product, I mean, you get constant updates. Like I said, for me, this is a constant like running dialogue with myself about a position that I've had for 18 years that's constantly changing. Right? This stage of my life and in the game, I'm 50 years old. It's November the 11th. It's Veterans Day, and thank you again to all of you out there who have blessed us all with this opportunity to not actually be putting our lives on the line doing this. When I have these dogs barking at me, sometimes I know that it's just not going to kill me, but that could be a little different. Right now, I appreciate that, like in all sincerity. This is me with running commentary reminding you of what fundamental quad we're heading to on an intermediate to long-term basis. So this type of real-time alert, if you want to not look at the last 8 of them, you should pay attention when big macro like copper, dollar, comments on what I'm buying or selling, adding to or not on TLT, QQQ. They've all been in all these notes that we've gone through in the last 45 minutes. So again, this is a real important one. And also in the early look today, I walked through the why. Because some people, they just can't get over the fact that when matters more than why. But that's okay. They don't understand fractal math. They certainly don't have the PVV model. And it's okay. It's everything's going to be okay. It's like I was doing this. That's because I believe in God. If you want to cancel on that, then good. You got to believe in something. I think Mike Saylor told me at one point. I said, yeah, I believe in my process. All right? So I believe in my process. I don't believe in hope.com. Hope is not a risk management process. If you get the dollar right and the quads right, you tend to get a lot of other things right. Okay, so keep your eyes on your fries. And then finally, maybe we'll have some time for a couple questions. But on this, on getting stopped out. Okay, here's a good one. Now, Microsoft, I just did this one. So do I stare at my? I think I'm long. I was long that one at 508 in RTA. What's the realized loss that I just took on that, Gendron? Show me the performance table. Go to the realize. Oh my God. I'm going to have to repent for my sins on this one. Minus 78 basis points, okay? Are you willing to take a less than 1% loss to protect against a 5 to 10% drawdown from here? That would be the question. Because what just happened, and Mandelbrot taught me this, is when the vol of vol changes the risk range, the fractal dimension starts to change. So what just happened in this thing, and I didn't tell it to do it, and if I knew it was going to do it this morning, I would have said something about it, but I didn't know. But now I know. Every single day, God willing, you have an opportunity to have the humility to accept that you have no fucking idea what's going to happen next. Right? And I use that word very specifically because I'm a hockey player and we use the word. If you don't like the word, too bad. Right? So again, that is when you need to pay attention. When that guy is standing in front of the net and you're the defenseman, you need to get your head on a swivel and watch that guy, or you will be watching this game from the bench, okay? So this is what we want. This is how we talk. This is how we think. This is how I am. Again, not for everybody. Stopped out, okay? So the risk range, like you're going to see it tomorrow, the low end of the range went way down, and the top end of the range equals a lower high for the first time. The top end of the range came down from like 540 to 523 or something like that. And that is just playbook, sell all signal. And by the way, 505 is trend. So it is below trend. And I don't need to dance with the devil on teetering bearish trends. I don't have a catalyst on Microsoft. They already reported earnings. If anything, the lesson on Meta, which has already broken bad to bearish trend, so did Netflix. Our signals nailed those too. I will stay with my signal, to Coop's point, because they're right a very high percentage of the time, much higher than my analysts or any analyst. Okay, so again, because they're set up for the the quantitative realities that you have of the machine. The current market structure really pays out on respecting and having the humility of not knowing why a certain thing's happening, but knowing when something like that happens. So on this one, it doesn't say sell some, it says sell. Okay? And tomorrow, I'll say, hey, look, I reduced my QQQ position again today, which you'll see in Portfolio Solutions, partly because this is a heavy weight. And it just broke trend for the first time. And the risk range changed, et cetera, et cetera, et cetera. So there's a lot of information in there. 50 minutes of it. I wanted to make sure I went through that exercise, if only for my own sanity.
Yeah. Yeah.
Because I do feel, I have feelings.
Yeah.
And I don't want to trade on feelings, but sometimes I can get excited about the opportunity, and other times I get frustrated about some of the feedback, and then I get excited again because, I'm not going to confirm or deny that Steve Cohen's replied to Real Time Alert, but it's a thing, right? Mm-hmm. And I think if you can communicate more out loud, then you get more people to understand where you're coming from, and hopefully in 50 minutes people understand where I'm coming from.
Yeah, there's a reason why we have this product, and it's because it works. And there's a reason why there's coaching notes, is so you can read the coaching notes and kind of, get it straight from you. And there's a reason why we're doing this webcast today, to help people understand it better. Because if you just read the headline, you're not going to have any idea what's going on. Sell, signal, Microsoft. Okay, I'm going to just take that and go short Microsoft with my whole portfolio. It's a lot more than that. There's a lot more that goes into it. So hopefully this has been kind of a helpful session for people.
Let me ask you this. After me underlying every word, painstakingly making you listen to me read every word in some of these coaching notes, are you going to pay more attention to the coaching notes?
Yeah, definitely. It's you're circling, underlining, and it's you took the time to write these and publish them. Maybe there's a reason for that. Someone who has a very regimented and strict routine throughout the day, taking time to do this every day, you got to kind of take that and add some value to it if you didn't already.
See, because you're coachable. You're sitting there realizing in real time something. Some people aren't. They just want shortcuts. Mm-hmm. And I'm not going to say it's okay, because if you have the same expectation to play at the highest level and deliver the highest performance at the highest level, you're not going to get there. You're going to get lucky from time to time. You're going to get mad a lot of the time, which I don't want that in your life either. It's just not, it's no way to live. But if you are coachable, you're going to get plenty of coaching points throughout the day that you ordinarily wouldn't get. Yes, you have to get them from me. I know that that's not always the most, sometimes I'm a little scruffy or Irish or moody or whatever. Sometimes you like it. I get a lot of feedback there too. So, hopefully we get a lot of feedback actually on this, because if there's anything, I'm going to start doing more of these. Because I think just reviewing the tapes is essentially what I just did. I just went back. All these things happen in game. And yes, I'm looking at some bad decisions. Celsius, that I thought I made a good decision within a bad decision, so it could have been a lot worse. Same thing with Tapestry. I made basically all the right decisions from a macro perspective, which is a rarity over that period of time, where a lot of people struggled. I didn't struggle. I struggle with understanding why people use 50-day moving monkeys as signal, why they use these freaking RSI charts or whatever. I'm not, and again, now here he goes again. If it's your entire being, then great, you don't need me. But if you want to get better, and again, understand like where I'm coming from. It's not like I don't have an exhaustion signal built into my own process. Why would I use Tom DeMark's signal? I have a better one. Oh, you don't? Oh, yeah, it's better. Yeah, it's better. Or I would use Tom DeMark's signal. Like it's a really interesting thing, the market and the profession that we live. A lot of people want and need to believe that what they're currently using is the only thing to use, because that's an easier assumption. I will constantly change, tweak, and evolve what I am doing. Okay? There was a point in time where I did use Tom DeMark's signal. It's a wonderful piece of work that he did, but now I basically, I shortcutted it or short-circuited it into my own process, and I know what to do with it. It uses 13 days. It's not that complicated, okay? So again, take what we're doing here, question it, compliment it, criticize it, but please don't ignore it. If you put in the time and read what I think are a tolerable amount of short notes, I think you're going to get a lot better.
Yeah, and hopefully it was helpful for people. I mean, it's one of those things that, Bennett and I actually met a few subscribers over the weekend, and they were like, it's crazy to see you like in person, and like, they feel like they know you just from kind of watching these webcasts or listening to the Macro show, and so it was really cool to meet those people and kind of have a little conversation with them. But
yeah, and on that, I want to make sure everybody knows. Most in-person encounters we have with people are great. That barking dog thing, like if you're one of them, like it's one dog barks and other dogs bark, but in a neighborhood, but our best power users are more like that well-behaved golden retriever of mine who doesn't show a lot of volatility in terms of his emotion, and there is a lot of gratitude both ways. We appreciate you. We certainly appreciate you telling us that you appreciate us, so thank you.
Yeah, definitely. Well, I think that's a good place to wrap it up. Thank you, everybody, for joining. And just a reminder, we have our Cyber November deals out there. So if you're looking to add some new products or renew your subscription, encourage you to check that out. And good luck out there. We'll be back at it again soon.